Welcome to the deep dive. Today we're really digging into some fascinating moves happening right now in the Ethereum market.
Yeah, we've been looking at market data analytics from places like Sentiment and just general financial news, trying to piece together the story.
Exactly. And the mission here is to unpack this kind of split we're seeing. What the big ETH holders are doing versus maybe smaller investors.
And crucially, why the price hasn't quite reacted the way you might expect given some of that big player activity.
Okay, so let's jump right in. The main thing, the core finding really, is this major difference in behavior, right?
Right. Between the large holders, Sentiment calls them whales and sharks, basically wallets with, say, 1,000 to 100,000 ETH, and the retail side.
And it seems pretty clear what the whales are up to.
Oh, yeah. Over the past month or so, data up to mid-June shows they've been, well, accumulating, buying quite a bit.
While retail was maybe taking some profits.
That seems to be the picture, yeah. These larger wallets, the whales and sharks, they added a net 1.49 million ETH in the 30 days leading up to roughly June 13th.
1.49 million ETH. Wow. That sounds like a lot. What's the dollar value on that?
At recent prices, you're looking at about $3.79 billion.
Billion, okay.
Yeah, billion with a B. And this pushed their total holdings up by like 3.72% in just that month.
So they control a pretty big slice now.
Getting close to 27% of the total ETH supply based on that June 12th data point.
Okay, so they're holding more, but are they just sitting on it? Or are they actually doing things with it? Their sources seem to touch on that.
That's the other really interesting part. They're not just holding. They're getting way more active, especially within the DeFi space.
Right, decentralized finance. What kind of activity are we talking about?
Some pretty specific spikes, like whale transactions involving Ethereum name service, ENS, up over 300%.
313.5%, I think I saw.
That's the number, yeah. Huge jump. And lending protocols, too, activity there from whales surged over 200%.
Okay, so serious movement in DeFi. What about layer 2s? Are they using those as well?
Definitely. We're seeing similar triple-digit growth and whale activity linked to L2's virtual protocol was mentioned. And lots of stablecoin movement, USDC transfers on Arbitrum and Optimism by these same big players.
So it's not just passive accumulation. It sounds like, I don't know, strategic positioning, using the ecosystem.
It suggests that, yeah, could be yield farming, could be seeking faster or cheaper transactions on L2s, maybe even governance participation. It looks like active use, not just stashing it away.
And usually when you see these big, supposedly sophisticated players making moves like this,
you often think about institutional interest kind of bubbling under the surface or maybe aligning with it.
which we also saw signs of, right, with the U.S. spot ETH ETFs.
Absolutely. That was a big narrative. They had that really impressive 19-day streak of inflows, pulled in about $1.37 billion total.
Mostly into BlackRock's fund.
Primarily, yes. That streak did end recently with a small outflow, but that initial run was, well, pretty significant.
And speaking of institutional or even corporate interest, that whole Sharplink Gaming situation was quite something, wasn't it?
Oh, yeah, that was a roller coaster. Their stock dropped sharply after a filing.
Because investors focused on the part about potentially buying up to $1 billion worth of ETH with proceeds from selling shares.
Exactly. Even though the chairman, Joseph Lubin, came out later and said, look, the filing was mostly misinterpreted.
Right, but it just shows how sensitive the market is to any hint of large-scale corporate buying of ETH.
Definitely underscores the scrutiny.
Okay, so let's bring it all together. This is the puzzle, right? We've got whales accumulating heavily billions of dollars worth.
We've got them actively using that ETH in DeFi and on layer 2s.
We had significant institutional inflows through the new ETFs, at least initially.
Yeah, all signals you might think would push the price up strongly.
But the price itself, it's been, well, pretty tame recently. CoinGecko data showed gains of maybe, 1.8% over 2 weeks, 3.8% over a month.
And still way down, nearly 48% from the all-time high. It's a real disconnect.
So the buying pressure from the big fish and institutions just isn't translating into major price gains right now. Why? What are the theories?
Well, the sources float a few ideas. Could be large sell orders sitting at higher prices, kind of absorbing the buys.
Okay, like sell walls.
Possibly. Or maybe just general macroeconomic headwinds are keeping a lid on things. Broader market sentiment isn't super bullish.
Or perhaps that retail profit taking we mentioned earlier is just sort of balancing out the whale buying pressure on the open market for now.
That's another real possibility. It really highlights how complex these market dynamics can be. Different players, different motivations, all interacting.
So wrapping this deep dive up, we see the big money moving in, getting active, institutions showing interest. But the price is lagging.
It's a fascinating tension in the market right now.
It really is. So the final thought for you listening, given everything we've just unpacked, the whale accumulation, the DeFi activity, the ETF flows, and this price lag, what do you think this disconnect really signals for Ethereum's direction in the near term? Something to chew on.